Okay, I'm sure after all the motivational talks that we've heard in the last few segments, I'm not sure how many of you are ready for the financial planning bit. So I want to jump straight into it. I know it's been a very long day for a few of you, but I think we are here as a panel to contribute with whatever little knowledge that we have from the field that we come in. And when the host was just talking about the real estate and finance, I just wanted to say that Abdul Aziz was not able to join us, so I will be moderating this session. And we'll have Colonel Augustine also, who's joined us. He will introduce us as we go through the rounds. Now, some of us always wonder why real estate and finance is always kept hand in hand. It's very, very integrally linked. And I would say, from my experience, one cannot survive without the other. So we need to understand what is the connection between finance and real estate in this ever-changing world. So what we are going to try and do is give you a small deep dive or a discussion into how these two are linked. So my name is Deepa Varghese. I work as the Chief of Operations and Finance with Gratiya Consultancy. I've been in Dubai for the last 23 years. Primarily, my area of expertise has been in financial planning and analysis, with almost 15 years plus in the real estate sector. I am a chartered from UK, which is the FCMA and CGMA. I also have a CPA Australia and a Master's in Business Administration and in Finance. And I was a little excited when I heard Maya is looking at doing DBA. I'm currently pursuing my DBA with a very focus on, if you are from Dubai, you will know that we had the Expo 2020 last year. So my thesis is on the economic impact of Expo 2020 in UAE. I was also and the reason why I picked that topic up is I was heading the finance for the legacy of Expo 2020 before I joined Gratiya Consultancy. I now hand over the mic to Abhishek Jha, who's my colleague. He will introduce himself as a part of the panel.
Hello everyone, and I want to introduce myself first so that we can proceed further. My name is Abhishek Jha, and I'm a Chief Administrative Officer at Hedge and Sachs and Foreman Fiefdom, and Managing Partner also. Now, Hedge and Sachs is a financial asset management company, and Foreman Fiefdom is our real estate arm. We deal with finance and real estate both. So that is what I want to introduce. First, Hedge and Sachs, we have started Hedge and Sachs at 2021, and we started just 4 friends. We have started this company, and we don't know about it, like where we are going. We just had a dream and we start working on it. We have an idea and we started working on it. So what I just want to tell you guys that finance and the real estate is the best of the best combination in order to take a valuable growth in your portfolio, financial portfolio. I believe that everyone has a dream to buy a home in their hometown or in Dubai, anywhere in the world. But a lot of people are not able to buy it just because of the financial issues, or a lot of issues are there. So that is all. We have solved this problem, and by doing this, we've made a hybrid model with merging with real estate and finance. So that's helped a lot to people that they can buy a home, and now we have seen our achievements. So we have a lot of good results as of now in 2.5 years. So I just want to transfer this mic to Mr. Colonel Anurag Trivedi. Thank you.
Thank you, Abhishek. Good afternoon, everyone. I'm Colonel Anurag Trivedi, retired Army officer. I've taken premature retirement in 2015 from Indian Army, and thereafter I've joined my father's business. We are basically Six Sigma Group. I'm representing Six Sigma Group. We are into infrastructure development, especially the commercial properties, which I will be coming up, like ideas I will be coming up during this panel discussion. Initially, I thought that seeing this thing, I have taken it as a builder, like real estate expertise and financial planning, how the builders are supposed to be. But this panel discussion is for the small investors, how they can benefit from this thing. So we'll discuss that only. The first and the most important thing which I can tell in real estate, that you'll find less of volatility, and risks are very, very minimum. In fact, during the COVID time, like everything was dropping down, the value of currencies were dropping down. However, the real estate market was stable. During that time, people said that no transaction has to be done. But in India, we've done a lot of transactions. People were, in fact, because the prices slightly came down, people were more enthusiastic for going into the real estate investment. And next 2 to 3 years, right now they are into huge profits.
Thank you, Abhishek and Anurag. While I was sitting and listening to both of them, what struck me right now was the three panelists that we have, right? One is someone from the real estate and finance who tries to sell investments, right? They try and encourage you to invest. The other person is actually the one who constructs the real estate. And I'm here doing the planning and analysis of what is, the cost benefit of investing in a real estate, and, whether construction off-plan sales is better, or, you invest in after or a ready-to-move-in property. Having said that, I think one of the points that Abhishek had picked up was, all of us love to have a house of our own, right? Somewhere that we can go back and say it's our own. Can I just quickly show of hands, have anyone who tells me that I don't want to do a real estate investment here? Or anywhere in the world, don't want to have a house of your own or a property of your own? No one, right? And that what brings me to the question that I want to ask Abhishek is, if you want to buy an apartment here, or a villa here, or a property here, what is the kind of rules and regulations that we need to keep in mind? Because that is key before you actually plan what your financial help is going to be for investing in a real estate.
It is very important to understand the regulatory bodies, like what kind of regulations are, what kind of regulations we have in that from the developers we are going to buy a property. So the first regulation that is major, most important, which is RERA. It is introduced in 2008 in Dubai, in UAE, and then 2017 in India. After that, in Dubai, major thing is Dubai Land Department. So Dubai Land Department has will decide that what kind of a service charge, what kind of admin fee a developer can charge. So it is every kind of property, whether it is a real estate in primary market or secondary market, residential, commercial, retail, shops, anything. If you want to buy anything, you have to go through with the regulatory bodies. If there's any kind of doubts you have, you should take an expert advice. Otherwise, you will be paying a hell lot of money and then you're not getting anything. So you will not be satisfied. And after that, later on, a lot of people blame the country, state, cities. It is your fault because you didn't take the expert advice. So I would rather suggest to take an advice from the experts who are in the industry from the last 5 years, 7 years, 10 years, so on. So I would suggest to go through the RERA website or Dubai Land Department website. You will check and you can do the due diligence on it, and then only you'll decide which property you should buy.
So having said that, I feel, and correct me if I'm wrong, Dubai is a more safer place to invest, Because I've had experiences, and I think when we were quickly catching up in behind the hall, Colonel was talking about how there are chances of risks when you invest in any other country than you invest in UAE. Having said that, from a construction point of view, or as a builder, like somebody who constructs buildings, do you think real estate is a good portfolio to be having within your investment portfolio?
As rightly brought out by Mr. Abhishek, the Real Estate Regulatory Authority binds the builders and safeguard the interest of the customers who are investing. And after 2017, there has been not even a single incident. All the cases which Real Estate Regulatory Authority of India is taking up is the cases before 2017. After that, whatsoever, because the RERA guidelines and their instructions are so strict, risk generally for a customer is almost nil. But before buying any property, you have to see the website of any country, RERA, the registration of RERA. Then the due diligence you can only do for the cash flow of the company, which is already available in the RERA website, as well as the third most important thing, the due diligence of the lands and the government dues. Like government gives these lands to the builders on concessional basis, as well as on installments. So if the builder is not able to pay the installments in correct time, so that becomes slightly unsafe property. However, government and regulatory authorities and the legal system still safeguard, because in case 3 consecutive installments, 4 consecutive installments are not paid, then the regulatory authority takes up the case with the NCLTs and all, and the property is shifted to some other builder. So these days the risk is very less. However, the returns are manifold. This is I can say.
So having understood what the rules of investing in a real estate is and the risk, I think we all can agree that real estate is one portfolio where your risk is, there is equal amount of risk and return in the portfolio. Now, when we're talking about financial planning, what is it that you think of when you want to invest in real estate?
I can give you several options, but what I suggest or advise, I would like to advise as per my experience. Real estate investment is a major investment you should have in your portfolio. Because if you have a real estate investment, you'll have a tangible asset. The best thing is, because if you invest in finance, I believe you are from finance, so I can understand that, like in finance you have a liquidity. It's a floating money, right? But if you invest in real estate, that is a tangible asset. So that tangible asset, anytime like the recession comes or goes, that property is like always for you. So it's better to invest in real estate, whether you want to invest in apartments, villas, residential, commercial, wherever you want to invest. But if you need my suggestion or advice in order to invest in real estate, then I suggest to invest in off-plan properties, because you will get a huge growth on it. So in like off-plan properties, you'll have a multiple payment plan options as per your pocket allowance, right? So that kind of a thing, it is much needed for everyone. If a youngster can buy a property, and if a senior citizen can buy a property, it is needed. So that is why everyone should think about it, because they are, especially in Dubai, because I've seen 7 or 8 years in Dubai after selling the properties or financial things. So in Dubai, your investment is the safest investment in real estate. There are multiple reasons. You'll get a huge ROI, huge safety, the luxury living, right? So there are a lot of things which is best if you invest in Dubai, whether it is a apartment or anything?
Like, I like to tell, like, across the world, generally it has been seen, like, when you are making a house, make it a beautiful one. However, in case if you are going for the investment, go for a commercial property, because you will get returns from 2 to 4% in residential properties, and in commercial properties above 8%. Along with that, you get a capital appreciation as per the market situation. But like I can talk about Delhi NCR. So Delhi NCR, the capital appreciation is around 12 to 15% every year. So this 12 to 15%, and as well as the ROI which you are getting through the rentals. So it is around 8 to 10% approximately. So your return is very good. And generally, like, people may not have a home for himself, but he will certainly like to have a business for himself. So demand of the commercial property is always at a boom, because, like, if someone wants to start a business or want to have a house, so generally he will say, let's start the business first, and with the profits of that I will be making a house. So always try to invest in a commercial properties. Just see the strength of the builder, and see the location and situation. That's it.
So now I want to ask a question to Ms. How important is it for financial planner to have an understanding of real estate as an asset class?
Okay, like I said, I've been in this financial planning as my forte. I'll just give you a small insight into what is it that financial planners look at when we are looking at real estate investments. So basically, as financial planners, we have to have a deep understanding of any asset class, whatever the asset class is. Like, it could be stocks, bonds, commodities, cash, and real estate. So we have to understand what is the risk and return associated with each and every asset class. And accordingly, we as planners will advise, if it is, say, for example, if I'm working for an organization who's a master developer, then I need to understand what their goals and needs are, and then do a risk return analysis and tell them whether it makes sense for them to invest in the portfolio or not. At the same time, we also have a challenge to keep up to date, like what I think Colonel brought out. During COVID, markets went haywire. So we need to understand what is happening in the market, be up to date, look at the trends. A lot of research and analysis needs to be done, because the onus is on us. And tomorrow, if an investment fails, it's very easy to come back and blame and say that you did not give us the right feedback or so. We have a lot more responsibility on us to ensure that, we give the right decisions to the companies that we work for. But at the same time, as individuals also, when we have friends and family who approach us asking, why is it a good investment to do, is an investment to go, which is the property that we need to look at, which is the developer that we need to look at. As a financial planning, the oath that we take is to ensure we give the right guidance. So that we need to keep in mind that also. We also have, like I think I had already mentioned, that we have to understand the cost benefit of each and every investment that is being done, so that we help make the right decision, and also understand the historical performance. So though we look at the future as well, we look at how the historical performance of the developer has been. Is it been worth, do they have credibility in developing or delivering what they have promised? So one of the highest risk is the off-plan sales that Abhishek was talking about. Yes, it comes at a much cheaper rate than a move-in apartment, but you always run a high risk of what happens if the developer is not able to complete it on time. Those are things where we come in and kind of do due diligence of the developer and make sure that you are making the right decision. So overall, having a deep understanding between every asset class is important as a financial planning expert, whichever field that is. But very importantly, real estate, because the investment is huge that you are doing. So we need to help people make the right decision. That is what I would say is the financial planning and aspect of investing in real estate.
That is why the real estate expertise and the financial planning is a winning combination. Just because without financial planning, we are not able to take out the maximum profit from our real estate. If you want to, I've seen a lot of people, they want to buy a property in a distressed deal, right? They are waiting to they are waiting for the recession. Once the recession comes, then only they'll buy the property. It doesn't matter if you merge these real estate expertise, real estate and financial planning, then you don't have to wait for recession, because after adding financial portfolio in your real estate investment, your profit already got doubled, right? So it is not required to wait. So I always say to my clients, my people, that don't wait to buy a property. Buy a property and then wait. Then you will get a huge kind of marginal profit. So that's all I want to say about this.
Yes. Yeah, I like to add like one more thing. Like before this, we had a motivation lectures. Don't get so motivated that you block your complete liquidity in real estate. The only bad thing about the real estate investment, though returns will be quite high, but you cannot take it on your immediate requirements. You cannot so have your liquidity with yourself, or you are meeting your immediate requirements, because selling a property, it takes one month, 2 month time. In hurry, if you'll sell, then you'll sell into losses.
I mean, like what Abhishek was saying, there's never a right time for buying a property. Now, people laugh at me when I say that I've been here for 23 years and I don't own a property. Okay? Every time we sit and think of, is this the right time to invest? We're sitting and think, my husband and I have this conversation. No, what happens to our jobs? No, what happens if one of us lose a job? Are we able to, carry on the EMI? Those kind of discussions come up, and then you get demotivated, and then we don't invest. So after 23 years, now we are sitting and thinking, actually, it is so funny that last week, I was sitting and doing a calculation of the rents that I have paid in the last 23 years. I could have invested in a huge apartment here. So I think I kind of very much agree with Abhishek that, there is no right time to invest. Why wait? Just invest when you have the capability to do it. I think that kind of wraps up all our thoughts that we had. But we're open to any questions that you have, then we can specifically address it. Anything that you can ask any of us from the field of expertise that we come in.
I think nobody have any kind of questions. So
there are a few types of REITs are also available, real estate investment trusts. You may also consider them also for investment for a fixed income, but you will not get the property, but a fixed return, it's like a mutual fund, you can say, but it will never come down, it will always go up. Any questions, please?
Yes.
Hello. Yes, now it's working. Thank you very much for your input. I'm Swiss, and as example, I now think about to invest in real estate in Dubai. I already invest in Switzerland. What step would you recommend me to follow?
The last thing, can you repeat that?
I invest already in Switzerland in real estate, but Dubai would be new for me. So which step do you recommend me to follow if I would like to invest in real estate in Dubai?
Yeah, this is the best time to invest in Dubai, because the first step I want to tell you is, I want to advise you is, you should invest in Dubai, but not in a bigger amount. Just go for the smaller thing, go for a studio or 1 bed or 2 bed, right? Because you told me that this is an investment purpose, right? So
Yes.
in Dubai, the best thing is in Switzerland, ma'am, can I ask you, in Switzerland, how much net ROI you will get from that property?
It's the same here in Switzerland. You have to bring 20% at minimum from your
10%?
own. No, 10. That's very seldom. 20. You have to bring 20%,
Okay.
and it's about between. It depends on the area.
Okay.
I would say the profit per month between 5 and 15%.
But on average, ma'am, I think if you check in any kind of website or any Google or anywhere, the maximum ROI in the entire world is in Dubai. 9 to 11% in residential properties. You can invest anywhere in entire Dubai, like in the main location, mainland, or any like outskirts. But what I suggest, in Dubai, you'll have a lot of capital appreciation chances also, because Dubai has developed in last 20 years a lot of things. The people thinks and Dubai do and did already. So I suggest, I advise to invest in Dubai, not in a bigger scale, smaller scale, with a payment plan, which will help you to manage it with a financial also, merging with finance also.
Always invest through some consultant, ma'am. You must always adhere to this. You must find out a good consultant over here in Dubai and invest through him so that your interests are safeguarded.
I think just to add to what Abhishek and Colonel said now, I think the first step that you need to do is identify the area that you want to invest in, correct? So where do you want to see yourself? No, you're not going to live there, but where is the demand that, because you need to find the right tenants. Now I know of people who have bought, like, as an investment studio and 1-bedroom apartments and struggling to put it up for rent. So it's very important to identify an area where there is a demand for the residential apartment and then invest in it, which then will add to everything that they said. It will automatically come. Your return of investment will come, everything will come. And I also agree that, it is good to go with a consultant who will guide you in the right. So choosing a consultant is also important. The right consultant is also important to leverage what you're looking for.
Yeah, I wanted to ask which area would you recommend?
I would recommend in Medan side, Medan, because there are huge development are going on there. Medan, if you talk about the rentals, then you should go for Furjan, that side, the Jebel Ali side. That is the best area to invest if you want to put your property on rentals. Now, if you want to take out the maximum capital appreciation with a nice view, nice price, then you should go for the Medan. Because there are multiple reasons to invest in Medan. But if you don't want to like recurring income, if you want a recurring income, then you should go for Furjan side, like Jebel Ali area.
And the reason we're saying this is because I think about 20-25 years back when Internet City and Media City opened here, I was wondering, oh my God, why would they do a development like this so far out? And those days I used to stay in Sharjah. And in 2005, I used to work in Media City. And I was like, oh my God, why would somebody have something like this? Now it is where Abhishek was saying, Furjan, that's the other side of, towards the end of Dubai, and that is slowly going to develop so much, especially because of the Dubai South and Expo that has happened. You're going to have Dubai is going to move, from downtown to the other. Dubai South is going to be the new Dubai now. So that's why I said, that'll be a good investment area too.
Always, like if you are an investor, always find that area where you have a scope to get the appreciation, right? Now, if you want to invest in downtown, it is already saturated. If you want to invest in Marina, JBR, you're not able to get the maximum appreciation. So why you want to invest there? You will get a huge ROI over there, rentals, let's say. you will get it because already developed. That area is already developed. But if you are an actual investor, you should invest where you can park funds for 5 or 10 years, and after that your funds will be multiplied by 10x or 15x at least.
You may also consider India as a growing economy. Like examples are like 2023 February, there was a UP Investor Summit. So companies from 47 countries have attracted around $3.2 trillion dollars investment. As well as the G20 summit. In the G20 summit, the summit has attracted $4.2 trillion investment in India. It's a very growing economy, and especially the national capital region. That is Delhi NCR, National Capital Region. That is also growing at a very huge pace. We are also working there, and investment there will give you manifold returns.
Thank you very much.
Somebody can hand over the mic. Yes, okay. Go on.
You just suggested her to invest in India, right? But I doubt if she can invest in India.
No. There are specific RBI guidelines. So a lot of foreign investment is coming to India, but it will be routed through RBI. There is a proper channel which takes around 15 to 20 days.
That's for majorly the corporate, as far as my understanding
No,
is
no,
concerned.
no, for individuals also. There's a proper process, so she can also pump in her money there also.
Are you certain about this? Are you certain about this? Are you certain about this? Are you sure about this?
I am 100% sure, because a lot of foreign investment is coming to our company also.
So what are you referring to?
Means referring to means?
I mean, are you following any article that can let us know?
That I will, I'll personally
Because
provide you.
I even
I'll
have a legal
discuss,
team out there in India.
I have to discuss with my CA. He only keeps doing
No, there is
that.
nothing related to the CA here. As per the law,
As per the law, it is permitted, but it has to be routed through RBI, and there is a proper procedure for that. Companies are also investing, however, the individuals can also invest.
I still doubt though. But still, I have another question to you three. As we all know, there are a lot of expats living here in Dubai, and whenever they have to make their first investment, they are always ambiguous whether to invest in their home country or here in Dubai. So what would you suggest them?
I would like to suggest advice in this case, because a lot of expats are there in Dubai, right? A lot of people stays on rent, and they are paying huge rentals, right? But if their people belongs from India and they want to invest in India, they can invest. But in India, there are a lot of things which is doubtful. I cannot, I'm not saying which is negative, but yes, you have to wait somewhere, right? And the ROI or capital appreciation, whatever the capital gain you'll get, there will be some taxes that you have to bear. Now in Dubai you'll have multiple reasons to invest. The first reason is this is the tax free. Whatever the income you generate here, you'll have a net income. Secondly, this is the safest city in the world. Third, there are multiple developments are going on, and a lot of safety is also there. So I cannot be safe. I cannot say that I'm 100% safe in India, because there are a lot of news I've heard. But in Dubai, I've never heard any kind of news where I can see like I'm not safe here. And expats always want to buy a new home in the other countries also, because they are NRI, any which ways. So they have to buy instead of paying rentals. If they are paying rentals of 5,000 dirhams, 7,000 dirhams in a month, they can easily buy a home by paying 3,000 or 4,000 dirhams as a mortgage. And even a lot of people from India also, or from any of the nationalities, from their country, they also can invest in Dubai, because Dubai is open for everyone. Anybody in the world, they can invest in Dubai. But in India, there are a lot of limitations.
And I think also, just to add to that, if you are looking at an investment to live in, like a property to live in, then I would rather have it here because, I'm spending most of my life here. The chances of me going, unless I retire or they ask me to leave the country, my chances of going back to India is very slim. So when I'm here, I might as well stay in a house that is my own rather than build a huge house in India where I'm never going to live there. So that's one of the main reasons I would say investing in India here is much better. I think the clock is ticking, so if there's no other questions.
I have one question. Sorry, I got one question.
Sorry, go on. Yeah.
So, if we discount the off-plan market, like you're not making the down payment, but you're actually buying into a real property and at the handover time, how does the property here really make sense? Because what we are talking about is around 10% rental yield, and which comes down to, after all the charges and everything, around 8 to 9% in real terms. Whereas if I invest in indices in the US stocks or any international market, a 10-year average still gets me plus 10%. And that's been history for the last 100 years. How does the real estate market make sense? Because then I'm prone to an exit strategy, because still when I'm exiting from the country, I still have to, it takes time. It's not really on a click of a button. Then I'm also prone to changes into real estate prices, because Dubai is not really a market as opposed to India, definitely, right? Because if I'm investing in India, then I'm looking at a very high capital appreciation, especially if it's a city like Mumbai. So how does it really make sense for someone who is coming in with an investment to buy the property, not an off-plan sale, definitely, because that changes a lot of things, right? Because I don't see real returns into my net wealth. So in next 10 years, if I bring let's say 1.5, 2 or 3 million down here, in next 10 years, I'll be better off having less risk, even in the financial markets, than investing into Dubai real estate. So just a question.
So, as if I understood your point, is instead of investing in off-plan properties, you can invest in US market, whether it is equity, indices, or.
Instead of investing off-plan, I'm not even discussing. So I'm saying, instead of investing into US markets or directly buying the property, because whenever I go and buy an off-plan, whether it's post-payment plan or they are offering no post-payment plan, because post-payment plan is just kind of export credit from the developer. Mm-hmm. It's no different than that. But if I'm buying a property here on cash today, I'm way better off investing into international stock markets, way better off. And I don't really have to do except investing into indices, because the average return is pretty much better in indices than what I'm getting here. My risk level is way lower, because if you bring into the economic turmoil, global or regional, I still am prone to the same thing. So investing in real estate here on cash basis, I'm actually losing my value in next 10 years.
Okay. I've not come across anyone who invests in a cash basis here, if I understood your question correct. So your question is that, are you not better off investing elsewhere than... See, the real estate here, what I have noticed in the number of years that I have been here, has always been, yes, there is turmoils that happen, there is recession that comes in, but if you're able to withstand that turmoil, you always get appreciation in your real estate, whatever the investment is. So, for example, I have known of people who have doubled what they have invested in real estate here. So recently I was talking to a friend of mine who told me that he invested in a property at 1.6 million, which is right now is available in the market for 3 million. So if he sells it, he's getting double of what he's invested. So, but having said that, I have had people who have lost money also. But that's a gamble you take in any investment that you do, right? But like we said, the safest is, from every market that we have seen or every asset class that we have seen, I feel real estate is most secure in terms of, even if you're not able to pay the loan or whatever, you have the property as a mortgage with the banks. So it's a safer bet than any other investments that you do. That's how I look at it. I don't know if you're happy with the answer, but
I'd like to bring out something like mathematics of real estate as a builder. I'm suggesting it's very, very simple. Like XYZ place is there. There is already a ready to move in commercial property there. The new builder who is just making the property next to it, in case if it's his vision is also same, so he has to anyhow keep the property rates 30 to 40% lesser. So that advantage is going directly to the customer by the time the property is coming up, as well as the property which was already ready to move in. It is already gaining maybe a capital appreciation of 10 to 12%, 13%. Here, this property will be, because it will be a newer property, it will be a better option for any investor or end user. So he will obviously like to go in for this new property. So mathematics is very good. However, while investing in the real estate, don't go for that assured return wala thing, because the builder is returning your own money to you only. So go for a good concept building. You will certainly get good returns, which will be far, far better, because there are two things, like things which, like in the stocks you will not get, and FDs you will not get, are two things. One is capital appreciation, and when the property is ready, you are getting ROI also. So I will just say, you buy a property, say of 1,000 square feet, say of 1 million. You have a some meeting with the builder, and you just tell him that I will give me this property at a pre-launch of $25 profit. When the property is getting launched, you are as it is getting $25 of margin. That makes it 25,000 rupees within a 2.5% return in just 15 to 20 days you are getting. Have I made myself clear to you or not? No, it happens. We do it. We give it to the investors. It's a mutual understanding. How will I attract the investors? I can attract the investors by giving my property at a cheaper price, as well as making some arrangements with them. It's a pan word. It's not in India only or Dubai only.
It's better to just give me a minute. It's better to like if you want to invest. I don't want to advise you to use your entire liquidity, like the full cash payment, if you're buying an off-plan property, because in off-plan, usually in Dubai, there are multiple payment plans. They are 1% every month, 5% in a quarter. So you can utilize your 30 to 40% by paying the down payment, and you'll have a 1 year of time. And the rest of 60% you have, you can invest in US market wherever you are confident, so that you'll get the both side returns. Because in Dubai, there are a lot of developers give you the rights to sell that property also at the time of possession. Like let's say if I give you an example of Shobha gives you a property option, like if you buy a property by paying of 20%, which is a down payment, and plus 4% DLD. Rest 80% you have to pay at the possession after 3 years, that too after 3 years. So 3 years you can utilize your funds anywhere you want. It is your funds, right? So you can wait, you'll have 3 years. So at the time of possession, you can pay more 30% so that you will be eligible to sell that property. Because there is a clause in SPA where you have to pay the property price of 50%, then only you'll be able to sell to other person. So that's how you can make a profit. It is best way to, that is the point of discussion we have, that real estate expertise with the financial planning. So merge it, then you'll get the maximum growth in your portfolio. That's what I advise. The rest is up to you.
Well, can I try to answer that?
Yes, sorry. Yes, please.
Yeah. Hi. Well, I think every financial market is an opportunity. It could be real estate or it could be stocks. Well, as they're saying that you should buy with payment plan, and you're saying that you should invest in cash. I think invest in cash But just find the right opportunity in the real estate market where you're finding a distressed deal. Because if you buy from the developer, if you buy from any broker, they're just trying to sell you. Whereas if you try to get a distressed deal and you buy it, what returns that you make is going to be at least 11% gross, say 10% net. That 10% net, you're going to get a single check on the rent. Take that money, invest back in the stock market. I think you'll make more money on that. I hope that answers good one. Well, I think the market gets affected based on which asset class are you trying to invest in. If it's a luxury product, you might lose money. If it's for people that can afford it, I'm not talking about affordable housing. I'm talking about, average type luxury. I mean, if you're buying at like a 1 or 2 million ticket size, it would sell fast as well. And the rentals that you'll make is at least around, 100,000. So looking at that way, and if you want to compare that with, the stocks or let's say the bond market or something, see, liquidity, of course, stocks is going to give you liquidity. But then again, that's opportunity as well, right? Your stocks go upside down. But at the real estate market, you can always get a loan or get a mortgage and then, repay it. Or you could basically take a finance whenever you are in need of cash. I mean, that's a typical classic example. I mean, the Bank of New York will not give you mortgage to buy their own stocks, but they will give you a mortgage to take it on your property, right? So as I'm saying, I mean, you're right in terms of, when you invest in the markets, it's going to give you high returns. But if you find the right deal in the real estate space, I think that's more better off in terms of buying it and then utilizing those returns in the financial market, because that risk is less in terms of, your capital risk. Because if you were to ask me, I will never put my $1 million in a stock market. I mean, I don't know what's going to happen in the, if Elon Musk is going to put something, the Tesla is going to come down. I'm still in loss as of now, by the way. But yes, I might put $1 million in a distressed deal in the real estate space because I know over the night, at least I'm able to get the same price back. Or at least I could take a mortgage back.
Right.
Oh yeah, I get it. It's the bond.
Right. Unfortunately, I'm sorry, this has been a very lively discussion, but I think it goes to prove that you all are the experts, that we have many, many experts in this room, which makes this conference so worthwhile. And it is great hearing all the different points of view and perspectives. So I think that's amazing. I think this also can lead us to the importance of networking with each other. Because making personal financial decisions, there are so many different elements to it that I think hearing from as many people as possible is always great. And I appreciate everybody's points of view. Thank you so much to the panel. Let's give them a round of applause for all their
so much, everyone.
taking the time.